Let's get right to the floor, showing our traders at the New York Stock Exchange and the CME Group. John Corpina. A, what's it like down there on the floor? Is it orderly? We know volume is relatively thin on this holiday shortened week. And B, are we in a bear market?
Liz, it is pretty quiet. Coming into this week, we knew there was going to be a lack of participation. Only 3.5 trading days this week on a normal holiday week. So that's actually adding to these large swings that we're seeing in the market.
But John, this is unusual. You and I have been around a long enough time to see a 400-point loss yesterday, 600 points right now.
Yeah, the fear is in the market. That doesn't mean it can't be done orderly. Fear is definitely here. I think investors watch this market evaporate up, and now they're watching it evaporate down. Cash is always king. Whether you need money on the sidelines to find the bottom or wait for some really cheap prices here, I think that is important. And maybe what Goldman Sachs says is 2019 single-digit returns. That's back to the old normal. Our new normal was double-digit returns. So maybe we got a little bit ahead of ourselves. Maybe we're expecting way too much out of this market. But I think if you take a step back, fundamentally, overall, the economy is doing well. I don't think we're in the midst of a financial crisis or anything that we've seen in these large market moves back in 2008, 2009. I think investor sentiment is still in this market, but definitely the fear is there. A lot of uncertainty of what's going to happen with tariffs. Tax reform is still coming into play. Some of these tax reforms at the beginning of last year are going to start hitting now this year. So this is where it all adds this uncertainty to our markets. But yes, this pullback is definitely something we have to watch. Just one last thing. With this lack of participation, I'm not fully convinced that we're in a bull market. Let's see what happens.
You mean bear market?
A bear market. Let's see what happens in the middle of December, third week of December, which is usually the end of the trading year. That's when we'll really know where participation is.
Scott, we just blew through the floor here. We dropped and we went well higher than the losses that we started with just 8 minutes ago. We're now down 611 points. Just a second ago, we were down 638. Folks, can we start looking, forget the laggards for a minute, can we just start cycling? I'm asking the control room here through some of the sectors. Every oil name I have in the sector, Scott, is down. Restaurants, all down. Regional banks, down. Insurance, down. Refiners, most of them getting absolutely hammered here because oil looks so bad. Let's try and see the yang, compared to the yin. What do you think? Is this a buying opportunity? People thought that yesterday.
So I do think it is, but only in certain spots, Liz. And this sell-off is severe. Business actually here on the floor is busier today than it was yesterday. That being said, I would have expected what we were just talking about, the fear in the market, to be much higher than it is right now. We look at, the VIX measurement. It's not up as much as it should be. Now, that being said, it is still up 10, 11% today. But to my estimation, it should be up much higher. That being said, I look at some of the FANGs that made a recovery earlier in the day today, and they're selling off a little bit now. All of them, with the exception of Apple, who's got their own issues for a different reason here, they all tried to make a pretty solid recovery, albeit from massive, massive sell-offs. I think it's a really good time to start picking at an Amazon, to start picking, NVIDIA rallied today based on the Citron
isn't
tweet,
that interesting?
But some of these other ones.
People thought suddenly that NVIDIA was cheap enough to start scooping up. I'm looking at it right now. It is still green, not by as much as it was earlier, but it's still to the upside by about 2%.
Exactly. But the bottom line is volume is still light. And I agree with what was just said, though. Let's wait to see what happens first, second week of December. Yes, we're in that, quote unquote, the definition of a bear market. I'm not ready to throw the towel in here yet.
Larry, what about you? Again, this is, as Scott put it, a rather severe sell-off. We've suddenly got inured, almost like a Teflon skin, to some of these bigger point moves, but I mean, 600 points. I'm not diminishing that. Are you?
Yeah, no, it's not nothing. But I do think this is a massive catch-up as opposed to like a canary in a coal mine. I mean, let's consider oil for a minute. Up $12 in September on what? On a bunch of rumors. In my mind, yeah, oil is a high flyer. It points to systemic risk in the economy. However, I believe oil is where it should be. Also, something that you and I have spoken about for a year and a half, and that is that severe chasm between the growth and value stocks. And I always have said, I've said it way too early as usual, is that when that snaps, watch out. Now, I probably said that at the end of 2016, so I wouldn't follow my advice per se. But I mean, that's what we're seeing. I mean, global growth isn't good, but we are seeing some silver linings in China, especially with stimulus. Our growth is moderating at a very high level. And lastly, we have the Fed. The Fed's implying 4 rate hikes. The market's implying less than 2 between now and the end of 2019. Maybe they turn dovish on the edge of on the margin.
Let me interrupt
and that
there.
will turn things around.
I don't know if you can pull up the Fed funds futures, but if you can, please let me know. This is for there it is. How much do we love our team?
Yep.
Yay. 72.3. Does this dip below 70, John Corpina?
It might possibly. This uncertainty in this market now, the Fed has always claimed that they're data dependent. And when you see the markets move like this, this gives them the opportunity to kind of reel it back a little bit. So it's going to be interesting to see just how their wording comes out, because they can use this as an opportunity to pause.
Okay. And I want to just give props to Luke Rabari, who over and over again said oil was too expensive. The supply is gluttonous at this point. And sure enough, that's what's reflected right now, even as OPEC pushes for supply cuts. Folks, I want to make that clear, because this is a pretty significant sell-off in oil, down 6.9% in the aftermarket at the moment. Inventories are just growing. Now we have it up 5.8 million barrels from last week. We're getting the other inventories, I'm not sure, maybe tomorrow. But Scott Bauer, give me your final thought here, because we're looking at, again, a 602-point loss on the Dow Jones Industrials. And what changed between September, when a lot of these indices were hitting highs?
You know, it's FOMO. Actually, it's FOMO. It's the fear of missing out. And I think that everybody that waited is now just piling on, Liz. And I'm not saying that the market's not going down any lower than this, but this to me is a pile-on trade, because we're just seeing it's sell first. It's sell whatever anybody can get their hands on, regardless of whether it's stocks, commodities, across the board. So it's a sell first mentality. I think there's really good opportunity in certain sectors across the board.
Can I just tell you guys something? We've got some breaking news. Number one, I want to tell our viewers we are going commercial free because of this significant sell-off at the moment.